Hello and welcome to Blytheway Business News. I am Bonnie Hughes. Our guest today is Amur Minerals. They have a very interesting project in Russia, as it is one of the few projects that is nickel sulfide that has access to China by rail and Europe. And here to tell us all about the company and where they're going forward is Robin Young, who is the CEO. Hello, Robin, and thank you very much for joining us.
Good afternoon, Bonnie.
You recently published your preliminary feasibility study on the project, and it had some quite good numbers. Do you want to tell us a little bit about that?
Yes, the key takeaway from this document itself is that the project is very robust on both a technical and an economic basis. Technical in the simple fact that it is a sulfide project. We're using technology that's over 150 years of age. So we know how to we know how the flotation works, we know how to generate a concentrate. History has proven it for us. So on a technological basis, being a sulfide project is great when you compare it to, say, existing lateritic deposits today. As for the study itself, we have taken a look at two specific options. And the first option is that we make a concentrate and we send it on to a purchaser who then toll smelts it. We call this our TS option. That option itself is very positive. We see that it produces at a C1 cash cost of about $3.80 a pound. And one of the things, though, when you sell to a smelter like that, there's a lot of punitive punishment that you take in selling the product. For instance, they will only pay us for 71% of the nickel, and they're going to keep all the copper, the platinum, palladium, and cobalt as part of their fee. The second option we looked at is building a furnace that we own, we operate. And the benefit we have there is that we take that concentrate, we reduce it by about 50%. And while we're doing that, we upgrade the quality of the nickel, the copper, cobalt, platinum, and palladium, and send that brick onward to another different refiner. Now, those refiners pay about 75% for all the contained metals. There are other deductions, but that's a huge difference. And in fact, if you look at a free cash flow metric, our toll smelting nets us about $2 billion, and our own furnace nets us $3 billion. That's a huge difference for an additional expenditure of about $125 million.
That is incredible. Now, as opposed to an either-or approach, are you looking at a phased approach where maybe you start off with toll smelting and then move to building your own plant once you have some revenue?
Yes, that's a very insightful answer, in that generally what will happen is any financing institutions that come in, whether they're Chinese, Russian, or Western banks, they're going to want you to be able to prove that you are fiscally responsible in the repayment of their loans. So the project would likely be divided into two structured components. The first being we generate the concentrate, and from the loan that we've used or that we've taken to pay for all of this, we end up paying it back and showing we're a good steward in being able to submit the monies back to the loan institution. At a point in time, once you've proven your ability to really participate and handle that funding mechanism, you will add in the second component, which would be the furnace. Each one of the banks and each one of the institutions have a different set of criteria, a different set of parameters. So if you ask me for a specific timing, whether it be year 2 after production or year 5 after production when we put the furnace in, that I couldn't tell you today. That's information that we need to further assess going forward.
And I noticed in the preliminary feasibility study that you used $8 a pound nickel price, so obviously nickel is not there at the moment. What was the strategy or the idea of using $8 a pound?
You have to take a look at all the projects that are being evaluated and where they're at in their life cycle toward production. If you're at a banking study, that means you've got all the estimates that are very detailed, plus or minus 5% in some cases, and you have to have 3 quotes. So at that stage of the game, you're just a step from crossing the finish line. You'll have to have, what is generally required is a very tight metal price to what the market is. That's how it'll work at a banking level. Then as you back away from the banking level, you become more and more flexible, because you don't know what's going to happen to long-term commodity prices or to long-term equipment costs. and mill feed materials. Those will all change with time. So as you move away from that, there's a tendency to escalate the nickel price. And I can give you a specific example. Today, Kunmanye and our PFS, we have used $8 a pound. In the past, we have benchmarked our pricing using $7.50. It's always been the historical number. We did increase it 50 cents a pound this time. When we look at the market analyses and when we anticipate being in production towards the early to mid 2020s, what we're seeing is a long-term pricing is actually being projected to be in the order of $9 to $10 a pound. And that's, and these are numbers that are not generated by us. These are coming from the likes of CRU and Wood Mackenzie, the specialists in long-term pricing. So there is a flexibility in that, but it's really, really important that, yes, you may have a benchmark price, and that's what you work all your results around, but then you have to step back and take a look at the sensitivities of your project to that pricing metal. For instance, in our studies, we specifically have stressed the operating costs, the capital costs, and the metal price by plus or minus 25%. So our numbers really look at what would happen to the operation all the way from $6 to $10 a pound. So on that side of things, we're using $8 now. It's a conservative number, and I know there's a project in Canada that was using $10 a pound several years ago, but $8, we're comfortable with that at this point in time.
And I guess the projection for the rise in nickel prices is obviously due to the electric vehicle market and the demand that's going to be happening as electric vehicles become more prolific.
Absolutely, and there's another hidden component there that people don't really talk about, and it's when you take a look at renewable energy like wind farms, wave farms, that energy also has to be captured into batteries so that it can be fed into the system on an on-demand basis. So there's a huge market in there, and right now only about 0.5% of the world's power supply due to renewables can actually be captured in these batteries. So that's a whole nother market that nobody's even talking about, because, and the reason for that is nobody can really reach out and touch it, not like you can with an electric vehicle. With that, it's yours. You've got it in your car park or in your driveway, and you've got possibly solar panels on the roof. So what you do see is that today, the numbers I have are that only 60,000 tons of nickel of the 2 million that were consumed last year were used in making electric batteries. Going forward in the year 2025, the projections from UBS are that we're going to need 700,000 tons of nickel a year just to meet the new electronic vehicle battery market. Forget the power grid needs as well, and forget the fact that stainless steel growth will continue and will continue to expand. So there's going to be this tremendous demand for class 1 nickel, which generally comes from sulfide deposits as opposed to lateritic deposits. But if you look at the total numbers, in 2025, a growth of 700,000 tons is a staggering number, because our entire mine, after we have been drilling for a good 12 years and getting all the engineering work and everything, over the life of the next 15 years, which the mine will go longer, but over that 15 years, we won't even deliver 700,000 tons total into the market. That is a staggering number. That means that there has to be a new Kunmanye discovered, drilled, built, and produced every year after 2025.
Now, did you choose the project because of its strategic location to China and Europe? Is that one of the reasons that this project is significant?
One of the reasons that you go to Russia is because there's a lot of unexplored ground. And we had information, research information, that was provided by the original founders of the company. And there was some indication that there was interesting ground in that part of Russia. Areas that are underexplored have a tendency to host larger ore bodies that have not been found yet. Using historical information that we had that was acquired in the late 40s and early 50s, we could see that there was ground for curiosity. And that's when we picked up the ground, that's when we were able to acquire the ground. And subsequently, we drilled in areas where we could see there was a nickel in the outcrop. and have expanded it since then. Right now, what we're standing on is a project that is the largest nickel sulfide deposit immediately located to the three hungriest nickel consuming nations in the world, which are China, Japan, and Korea. So we got to the far east of Russia because the information said it was a good place to go. Over the years, the markets have changed, and especially with the electrification of the transport industry, now we're sitting right on the border of the three largest consuming nickel nations in the world, and the number one electronic vehicle market will be China. If it's not already, it will definitely be China.
You are working on your bankable feasibility study at the moment and moving that forward. And is that part of the reason for that is to help you, assist you to find strategic investors?
Well, we're not calling it a bankable feasibility study at the moment. What we are doing is we're taking all our plans, and there is a Russian component that has to be accomplished because we are in Russia, and there is filings and everything that we have to do according to their standards. And then there's the Western approach, which is what are the Western banks going to require from us? They're the international resource funding banks that you would anticipate, as well as the Chinese banks. They all have a little bit different. So what we have done is we are presently putting together a full-on Gantt chart that shows every step of every possible option for each one of these alternatives. Once that's put together, I can have the final detailed budget, and I can sit down across the table from potential joint venture partners, as you've mentioned, going forward and sit down and say, all right, are you interested in working in the smelter? If it's a smelter, these are our participation principles where we can work together. And then we can reach an agreement on that component or that aspect. So it's very keen that not only do we have this schedule of expenditures and how much they'll be, but who are the partners? Who are the participants that we could flag out of China, Japan, or Korea? We've been working there for over 2 years, and we've got some good contacts. And now that we have this PFS, this is a document we can place in front of people, and we can have some better, firm discussions as to how we move forward. But the key is finding a strategic partner or partners, because the mining equipment and the milling equipment can be manufactured and constructed in China. That's a lower cost than if we buy it from the companies of Caterpillar and Sandvik, which are part of our estimates. So we've got a higher cost element in there. These are the kinds of things that all need to be very carefully considered, crafted, and brought together into one coherent strategy. And that strategy really is super, super Asia-focused. We're Asia-centric. We're located in Asia. It's just the major market is just across the border from us. So it's really important that we stay focused and we identify these partners. And one of the interesting things is that there's been a lot of groundwork laid for us by the Russians and the Chinese, because they've created this thing called the China-Russia Direct Investment Fund, which has well over $1 billion in it. And that fund is particularly targeted to support infrastructure development. We've got a road, and that road is going to be about $130 million. Part of this funding of the road, one of the aspects is low interest loans with delayed capital payments. These are all items that are very specific and have to be, they're like chess pieces on the board. They have to be moved very, very carefully. We don't want to tension the deal by giving somebody an advantage over another one that will cause heartburn for later negotiations with the project.
What can investors expect from news flow? Obviously, when is the BFS expected, and what other information will you have coming out to the market in the next few months?
Okay, on a very near-term basis, we will be getting a REACH announcement out where we have the detail, the devil in the detail, so to speak, with the executive summary. We'll get that out so everybody can see and they can plug and play with their own numbers and determine if this is the project of vision for nickel and electric battery markets of the future. Following on that, we're also doing a proactive investor night next week on Thursday evening. And so we're really at a point now where near term, let's engage our private investors, get them to understand the full complement of what we've accomplished with this PFS. Beyond that, then we will be putting together our scheduling plan and teaming who our staff will be to work on each one of these various components. Moving on, what we have is, we do know this. We know that the study itself is only a 15-year life. We had results from RPM Global, who's a mining consultancy, that said if you can mine, if you drill additional holes in this inferred resource, you could get out to 24 years. That's what we did last year. And that information, which was very successful, where we converted all the inferred to indicated, and all the new mineral that we discovered has been drilled and indicated, is going to have a very material effect on the operation. The resources are going to be much bigger. The mining ore reserve is going to be bigger. The open pit component is going to be larger. And it may even be the point where it becomes an entire open pit operation. More metal will be recovered. We can schedule the better metal further forward into the cash flow model. A key point, because the Russian government is giving us tax breaks for metals royalties and net profits tax. In fact, there's no net profits tax for the first 5 years. So we got to get that metal forward into the structure of the model. As we evolve and work through this, which is the resources, the open pit mining, the metallurgical work, those results will be delivered into the market.
Well, Robin, thank you very much for joining us, because it sounds like a very interesting project, and we look forward to hearing your updates and seeing the executive summary and how the project progresses, and we hope to see you again.
You're welcome. Thank you.
And thank you for joining us on Blytheway Business News. Please have a look and see when they are doing a presentation at Proactive if you'd like to learn more about the company.